Okay, hi everyone. Welcome to this week's market wrap from Magnetic Trading on the index markets. So this week, of course, we'll go over, as usual, how we fared last week in the markets, as well as our clients. We're going to teach you the spike trade this week. So this is actually a trade that we regularly take in our live trading room. Remember, the live trading room is where we meet our clients every day at set time at the open of the index markets, and we particularly like the spike trade. So we'll cover why we like that spike trade and how you can execute that yourself. We're also going to give you a weekly wrap up of analysis as well and what to look out for. So last week we had two winners on the FTSE 100 index, producing a nice win, and we had one win. And we actually had a loss for the first time. The DAX hadn't lost for since we launched the program. It had its first loss. So, but actually, it was a loss, and then it was quickly recovered by a win on Friday. So, so all good on that side. And we banked just under 2% for the week. So a nice, healthy return for us, and more importantly, our clients. So the spike trade. The spike trade is a trade that we've been taking for many years now. We like to take the spike trade at the open because at the open of the index markets, there's a lot of volatility. So when markets open, they've been closed overnight, you've got a lot of buy orders and sell orders in the market waiting to be executed. So as soon as that index market opens, whether it be the DAX, the German market, or the FTSE, the UK market, or the ASX, the Australian market, whichever market it is, there's going to be volatility. So in short-term trading, we do like volatility. If we've got volatility, the market's moving quickly, our trades can be completed quickly, because remember, we don't actually like being in the market for very long. When you're in the market, you're at risk. So here at Magnetic Trading, we're all about getting into that market, taking the cream off the market and getting out. We're not about staying in there trying to get the big piece of cheese and taking on a lot of risk. We'd rather get in, get out, close the books, sleep well at night, no risk on the table. Now, the spike trade particularly allows that type of methodology to continue because it's a very, very quick trade. So actually on the screen now, you're seeing a trade that we took on Wednesday last week. So what I'm going to do is I'm going to go over to the charts and show you how we execute the spike trade. Okay, for the spike trades, we're looking at three key rules here at Magnetic Trading. The spike needs to be at least 30% ATR of the 5-day average true range. So it's a 30% of that 5-day average true range on the market, whether it be the FTSE, the DAX, or the ASX. We want it to be into a key level. So that's important because if it's into a key level, there's more chance of the market turning at that point. And remember, a spike is an imbalance anyway. So it's a quick move in price action which reverses very quickly. And we want to be looking for a 50% retrace. So once we're into the trade, we're taking advantage of that imbalance into the key level. We're then looking for a 50% retrace. That's the high probability target. Now, if we take the report on the 23rd of September, these reports we issue before the market opens, so it's basically our trade plan. And you'll see we have certain sections here. One of them is spikes in the first 5 minutes after the open. So what we were looking at is we were looking for a spike down into 58.70. So that was a key level in the market. And we were then actually looking for a move up to 59.50 from that level. Okay, so let's go over and see how that fared on the 23rd. Okay, so this is a 1 minute chart on the FTSE 100. We had that piece of information before the market opened, so we knew that we wanted the market to move into 58.70. So 58.70 is here. Each candlestick here represents 1 minute of action. So it's your first minute, second minute, third minute, fourth. And we actually got in around down here, just towards the end of the 5 minute period. And we bought the FTSE with a stop below this key level at 58.70. And what you'll notice is that if we take a Fibonacci tool from the top of the high of the market to the low of this area here, you'll notice that a 50% retrace was this level here. In fact, actually, let's just take that off actually, because actually the anchor for the Fibonacci should be here, should actually be down here, because that's when we entered. It was actually this level down here. And then you're looking for the 50% retrace. And you'll notice actually that the market did a perfect 50% retrace here. So at this point, you want to be either closing your trade if you've used a very small stop, or you want to be taking half profits. So how do you take half profits? Well, if you bought $10, you simply sell $5. You're closing half your position. You lock in some profit, and then you use that profit to pay for a stop, ideally below 58.70, because that's your key level. And that's pretty much what we did. The market then actually had a little bit of a retrace, stayed above 58.70, and then moved on up higher. I think we took some more at 59.45 on the way up. So a nice trade there, but the good thing about the spike is you can get it, it's completed really quickly, and you can get into a position where the trade is risk-free, so there's no emotions. If there's no emotions, you can run the trade because there's no money at risk. And it's very easy to run a trade to a higher profit target once you know you can't lose. Mostly people close out early, or they don't bank as much money as they should do because they're emotional, because they're worried about money that they might lose in the market, or they're just snatching at money. But if you trade this way, you've got no emotions. You've quickly got into the trade, you've made it risk-free, and then you just let it run. If that's our view here at Magnetic Trading. We don't take spikes after the first 5 minutes because volatility generally subsides at that point in time. So we do want to be focusing in those key 5 minutes. That's when the good spike action happens. And as I said, if it's into that key level, then we will take it as an official trade, which means that we're taking it on our own in-house account here at Magnetic Trading. So this principle really can be used on any market. You can look at the DAX, you can look at the FTSE, you can look at the ASX, but look for that quick spiky action at the open, and see how you get on. Let me know. Email me at mark@magnetictrading.com. Let me know how you're getting on with these spikes. I'd love to hear. And another thing, just to finalize this bit of training, is that this type of trade means that you can also leverage up. So if you're one of those traders that maybe you're inclined to get worried about leveraging up because you don't like being at risk, then this type of trade will suit you because it happens so quickly. You haven't really got time to get too emotional. And because often you're using a real tight stop, it means that you're not going to be risking too much. So for example, in this trade, had we not met this 50% retrace, I really would have come out if we'd broken below 58.70. So the risk involved is pretty minimal on some of these spike trades. Also, if you're a trader that often runs losses and blows up your accounts maybe in the past, this trade will also help because you're getting in right at the open and you've got the whole day of action to unfold. you're less likely to let a trade run. So really this trade setup will protect you from yourself. All right, let's go over the weekly analysis now before we wrap up things for this weekly video. Okay, so for this week, what are we looking at? So on the FTSE 5800, below that level would be bearish. However, as you will have noted if you've been following this video series for a number of weeks, that any big pullbacks on the FTSE 100, we're actually looking to buy. So even if we do slip below 5800 down to 5700, we'll be looking to buy long term anyway. Back above 5900 on FTSE, we are getting positive again. I expect a quick move back up to 6000, and then of course long term 5550, all bullish above there. Happy to buy big sell-offs whilst we avoid a full daily candlestick closing beyond that level. That means the whole candlestick must be beyond 5550. If you don't know what I'm talking about, refer back to last week's video where I covered advanced stops in the market. Okay guys, it only remains for me to say have a great week trading, and we'll join you in next week's video. Obviously, if you're in advisor or pro trader, we've got the end of quarter trades coming up this week, so some exciting trades on the FTSE DAX and the ASX. So we'll be doing them on Wednesday, which is the last day of the quarter.